Okay, so about 15, 20 years ago, commercial banks started buying up insurance companies, financial marketplaces, okay? Some of the investment banks, and then the insurance companies started buying up the investment banks. They merged, okay? So when you see that term financial planner, the question is, what do you do? What does that financial planner do? They sell a broad array of products, or they specialize in something, okay? And how much do they do in-house, and how much do they do using other people's products? And more, the products have become commoditized. They're not that special, okay? And so the focus more is on gathering assets and giving the advice rather than building a portfolio. And that's true for insurance as well as for investments. All right, direct response. You've seen it on television, okay, where you're given a website or you're given an 800 number, okay, and that's where the business takes place, over the phone or on a website. And once again, your generation is okay with that, my generation is not. Okay, and for the insurance company, it's less commission, and the commissions are pretty hefty. I've got a couple of people that are going to talk to us either by Zoom or they're going to come in. One's an exclusive agent, a captive agent, and then one is a broker. And they're going to talk to you about the financial agreements that they have and how their business operates, so you can compare and contrast what they do. Then they're both here in town. Have y'all seen Heyman Insurance over across from Simmons Bank? It's a big independent brokerage firm. And then I'm going to get Blake Hendricks to come in and talk to you about State Farm. And State Farm is always looking for new agents. And what they do is you join a firm like with Blake, and Blake will train you and teach you the business. And then after a few years, you go out on your own, like Blake. And then Blake makes an override on your business. Okay? So they're constantly looking for new people. And Blake has done that with a couple of different people in his career where he's trained them and sent them on their way to open up new agencies. Okay. All right. Whoops. I'm telling you, I sat down with the client, we went over that annuity. Oh my goodness. Woo. You talk about complex. There's just a lot to know. And I've always felt like people who that I knew in school or students that I had that weren't very good students, and they call on me to try to sell me really complicated products, and they act like they know what they're dealing with. And I remember that they barely made a C in 2 or 3 classes. And it's just hard to think that they really understand what they're talking about. Sometimes I have a hard time following what they're saying. And I'm thinking, if I can't follow what they're saying, it's not that I'm so smart, but it's that I don't think that they are. Maybe they are, maybe they just didn't apply themselves. Who knows? But you know what I'm saying, it's just hard to deal with somebody who you watched struggle with basic concepts, and then they're presenting. I had a guy try to sell me $1 million single premium life insurance policy, which required $1 million up front. Like, dude, first of all, I'd never buy a single premium life policy, but if I did, I wouldn't buy it from you. I'd say that, but I thought that. Because it's complex, All right. Okay, so worksite marketing. So a large employer, and this happens a lot, okay? I've seen in our business, I've seen agents and I've seen financial planners, and I've seen investment people make an entire career out of dealing with one company, one employer. You go to Unity, and you work your magic, and they agree to basically sponsor you to sell to their employees. And in my business, for example, they would say, every time someone is approaching retirement, they would say, hey, you need to call Ellis Sloan. We've got to deal with him. He's going to give you a 25% break off it, or 30, whatever it is, reduced fee, and he's very good. We've had very good experience with him. He's got good credentials, and so they constantly feed clients to you. And I've seen lots of people have an entire career working with one large employer, Harding in this town, Eaton, you know, whoever it might be, large employers. Oops. Okay. So why do you give them a reduced rate? Because you have access to a large volume of prospects. And when I was working with a state agency, they brought a big investment firm in, and the investment firm cut a special deal with that. It's a quasi-agency, it's not actually directly state, but, and then they went around from city to city to city, selling basically a type of money market fund for the cities to run their payroll and their short-term investments through. And they gave them a really good deal because they ended up signing up like 50 or 60 cities, and they had like $500 million under management in a couple of years. All right. Now that seems, okay. The first two are redundant. Okay, I'll have to take those off, just redundant. Okay, one thing that Blake and hopefully we can get Blake and Doug Dowdy to disclose to us is what their commission rates look like. Okay, I'll give you an idea what the commission rate on a variable annuity or an annuity looks like. These people put in $500,000 up front, and for the first year, their surrender value, they could have surrendered the policy, gotten their money back, was $450,000. Okay, so it was a 10% commission on $500,000. So the agent made $50,000 for closing that deal. Just to give you an example of, if I was to manage that $500,000, my fee would be $5,000 a year, and he made $50,000, made 10 years worth, right there, just like that. So you say, why do people go into that business, and why do people sell that product? Well, that's why. You know, you sell 3 or 4 of those products in a year, you've had a pretty darn good year. Okay. Just think about it, the accountants are graduating and they're going to work for 60 and 65. You sell 2 annuities in an entire year and you're going to make 100. Not a bad deal. All right, this is important. Who owns the renewal rights? Okay, so once you sell a policy to somebody, okay, the policy renews annually. And of course, the heavy lifting has been done on the front end when the people say, I want your policy. Most people do not shop around on an annual basis. Okay? And so the question is, does the agency own the renewal rights, or does the insurance company own the renewal rights? Okay? All right. So often the insurer will direct bill, but in this case, an independent agency owns the renewal rights, and that's really important. Okay, so agents may be given some legal authority to to adjust claims. And they can provide additional services. We'll talk to Doug about that because his company does that. Blake does not. Oops. Okay, so under an exclusive agency system, okay, the insurance company owns the renewal rights. Under an independent agency, the agent or the broker owns the renewal rights. And that's important, okay? So when you see Farmers Insurance, State Farm Insurance, State Farm and Farmers owns the renewal rights. You know what that's going to do? That's going to keep that agent in that relationship, particularly after you've built a book of business. Okay, once you have clients, you know, once you have a list of clients, that's your book. Okay, and the goal is to start adding. I mean, you want to grow your book of business in the first 10 years, and then you reach a certain level where you're making $400,000 or $500,000 a year, which is not unusual, particularly in a metropolitan area, for an insurance agent. Okay, the mortality rate, the failure rate in the financial services industry is really high. Okay, the people start, they last a year, year and a half, they're out. Okay, but typically, if you make it in the business, then you're going to make a good living. You're going to make a lot more than what most people will make. And you'll have a pretty good lifestyle, okay? You don't have a boss breathing down your neck, okay? So you're going to make, in a town like Searcy, you'll make $150,000 to $350,000 a year, working 30 hours a week. And you don't have somebody saying you're not meeting your sales quota. Okay, so it's a good lifestyle. You're going to be going to all your kids' ball games. But those are the ones who make it. And you have it takes patience and persistence to build that book. All right? All right, so renewals. And by the way, when you have a book, that is something that you can sell at the end of your career. Okay? So you get paid while you're in the business, and then you get paid a chunk at the end. And that's a real important thing. That's like running a business and then selling the business. Okay? So it's not just about the annual income you make. It's about building an asset. And you need to be mindful of that in your career. If you go to work for a company, you're going to make annual income, and you may get some bonuses and that kind of thing. Are you building an asset? Now, one asset that hopefully you will be building is going to be your retirement plan. Okay? But an alternative to building a retirement plan, or maybe in addition to building a retirement plan, is building a business that you have ownership in that has value. My brother doesn't have much of a retirement plan. His business is his retirement plan. Okay? All right, so the exclusive agency insurers provide offices, support staff, administrative systems. What do you call that? A platform. A platform with which to do business. Okay? Advertising, and that's important. You know, like a good neighbor, State Farm is there. See your local State Farm agent, Blake Hendricks and Brian Maddox in Searcy, Arkansas. Does Blake or Brian pay anything for that? No, they don't. Not directly. Indirectly they do because their commission rates are a little bit lower. And that's where it comes from. But State Farm advertises all across the country. And Blake and Brian benefit from that. Okay? Everybody up with me? Did you like the way I sang that song? I could do it better, but I don't want to make anybody feel uncomfortable. All right. Let's see. Direct writer works for the insurance company, and they are paid a salary plus. So their commission rates aren't going to be as high, but they know that they don't start at zero every month. Now, when you have a book of business that has renewals, you're not starting at zero every month. But your first couple of years in the business is going to be lean, okay? And honestly, the best way to handle getting into the business is to partner with an older person who's getting out of the business, okay? Because they have a big book, and they'll probably, if they get to know you and they feel like you're going to take care of their clients, they're going to start giving you their more labor-intensive problem clients, okay, that don't have large accounts, so you can get your feet wet, learn how to deal with people like that, and it's a better quality of life for them, and you start making money, okay? They'll start handing you accounts, and at the end of a year or two or three, they'll be introducing you to their bigger clients as time goes on, and then the time will come when you pay for that book of business. And that person may finance it. They may say, okay, here's what I want. I want you to go to the bank and borrow $100,000 and give me $100,000. And at the same time, I'll finance the other $600,000 that my book is worth. So you're going to have to borrow a total of $700,000 for this book, and the debt service on that is going to be $60,000 a year. But the book of business will generate $300,000 a year in income. Not a bad deal. So you can pay $60,000 a year in order to generate an income of $300,000 a year. And he's handing the business off to someone who he knows, and someone he has faith in will, and when I say he, I mean he or she, will take care of the client. Okay? All right, some of this stuff is just so redundant. Okay. Last slide. This could be done in 3 slides instead of 8 slides. Okay, group marketing. Okay, and so once again, as I said before, this is redundant. This is called elephant hunting, where instead of looking for one client at a time, you sell the managers on sponsoring you to offer products to the individuals. Okay, so typically the insurance company will have someone who specializes in this kind of selling. People who have experience, who have gone in and sold to these types of associations before. And they'll have products that are special, they're customized to offer to these different groups. So this is a different kind of selling. This is not retail or individual selling. It's really more business to business selling. All right. And it even goes so far, it's a partnership where the employer, whoever it is, will have their accounting system set up so that they will deduct the fees, the premiums, right out of the customer's pay, which makes it really convenient for the insurance company, and also it's kind of painless for the employee, because the employee doesn't have to write a check for it. They don't see it, and honestly, as a provider, the last thing you want is for the customer to see a fee going out the door every day. And that's a good part. Mutual fund companies are that way, and the way I charge, same way. My clients' fees come out of their accounts. They don't write me a check. And I don't want them writing me a check, okay? Because they'll start looking at it going, whoa! I had that happen to me too. When I was a consultant for a large company, I got called one day from the CFO, and she said, are you aware that you are the second highest paid person in this organization? And I said, no, how would I know that? And she said, well, I informed the director of that fact in a meeting today, and he wanted me to call you to talk to you about lowering your fees. And I said, Cindy, why is that a surprise to Don? She goes, what do you mean? I said, he's the one who approved the deal. You know, and the way I get paid in the business that I'm in is very different from your business. He's used to paying people $50,000 a year and $60,000 a year to do administrative stuff. And that's not how people get paid in my business. I'm managing $200 million of your money. And I showed you, when I made my proposal, I showed you that I was about 40% lower than your other options. You could have gone with your other options. I laid them out there. And that was one reason y'all went with me, is because I was 30 to 40% lower than your options. And now he's looking at it like I'm an employee of the company, and I'm not. I'm an independent contractor. And she said, will you cut your fees? I said, yeah, I'll cut my fees. You know, but you're already getting a good deal. And so I'm going to send you a proposal, and I'm going to point that out. Yes, I will cut my fees because y'all have been a client of mine for 30 years, and I'll cut my fees. But I don't think you're looking at it right. All right. Let's download Chapter 6 and get going on Chapter 6. By the way, y'all saw the thing about Breonna Taylor. You know, I don't even know what to think about that, to be honest with you. My only response to that is that they did an investigation. And either there is a massive conspiracy going on across this country, because every one of these cases that happen in different cities that involve different police forces, different prosecuting attorneys, different grand juries, you know, 90% of these cases, there aren't convictions. And so either there's just a massive conspiracy across the country, or wrongdoing isn't happening. And we may be seeing things that certainly look like wrongdoing, but once a full investigation is done, there aren't convictions. And so it becomes very confusing. You know, is this a situation where a very serious systemic injustice is being done, or are we seeing the truth after a thorough investigation is done? And I don't know the answer to